If you already have the cash available to get your solar and battery system, that's great. You can just go ahead and buy it today. But what if you don't have sufficient cash available, or even no cash at all, but you still want to join the home solar revolution? Don't worry, I've got some great options for you. Hi there, I'm Gary and welcome back to my channel, Gary Does Solar. In this video, we'll be looking at the many different ways you can finance your solar and battery installation if you're working with limited funds or even no budget at all. But before we do that, it's worth setting the scene for home solar adoption in your country by stepping back a little and looking at technology adoption in general. When a new technology emerges, it takes time to gain widespread adoption. The Rogers diffusion curve, developed by Everett M. Rogers and now commonly called the technology adoption curve, outlines how different groups adopt innovations over time. It categorizes adopters into 5 stages based on their willingness to embrace new technology. First is the innovators. They're risk takers and tech enthusiasts, and they have the resources to experiment despite the potential for failure or setbacks. Early adopters embrace technology soon after innovators. They tend to be respected opinion leaders who carefully evaluate innovations and then spread awareness through their influence. Then there is the early majority, who wait to see evidence of a technology's value before adopting. They typically rely on reviews and recommendations, and their presence signals broader acceptance. Following them is the late majority, who are skeptical and adopt technology only after it's become mainstream. They prioritize factors like affordability, reliability, and also widespread use. And finally, the laggards, the last to adopt. They're resistant to change, often due to limited resources, a lack of awareness, or even a preference for traditional methods. They adopt only when it becomes unavoidable to do so. And just like other technologies, home solar follows this model. If we were to plot adoption over time from 0% to 100%, you can see the line has the shape of the letter S, and because of that it's commonly referred to as an S-curve, reflecting the initial gradual and then rapid uptake of a technology. And if I had to guess where on that curve the UK is right now, I'd say we're not long into the early majority phase. However, here's the issue. Not everyone along this curve can afford the upfront costs of home solar. It's easier for the innovators and the early adopters, but as adoption continues, the likelihood of having available funds decreases. And so in this video, we'll be looking at a number of finance options available. Now, while our focus will be on the UK, because that's a market I understand well, the principles still apply globally, so even if you live outside the UK, it should still be worth your time. So, what options are open to you if you don't have all the cash available for an upfront purchase of home solar? Well, let's start with a couple of options that I would not recommend. Rent-a-roof schemes. Rent-a-roof schemes are where you essentially give permission to a company to install solar panels on your roof at their own cost, and in return you're allowed to use the electricity generated by those panels to power your home for free. I mean, it sounds great for you, but it's also great for the company, as they can sell all the electricity you can't use back to the grid. And the reality is that when solar generation is at its highest, around midday, you're not actually consuming much at all, so it's highly profitable for the company. Rent-a-roof schemes took off in the UK under the feed-in tariff or FIT scheme, which offered generous payments for your solar energy. But when FIT was replaced by the Smart Export Guarantee or SEG a few years ago, with lower export rates, rent-a-roof schemes became less viable and began to decline. Which is no bad thing in my view because they come with quite a few downsides. They're generally a very long-term lease commitment, perhaps 20 years or more, and this can become quite restrictive if you need to move home or carry out any renovation. If you want to move home, the lease transfers to the new homeowner, and you can just imagine buyers being put off by that. And even if the buyer was happy to take on the lease, their mortgage provider might not be, requiring leases to be terminated first. And that could be problematic for you if there are punitive exit fees. Finally, if you're renovating your home, which requires access to the roof, perhaps a roof repair, you generally have to compensate the rent-a-roof company for lost generation during that time. Personally, I can't think of a worse way to go solar and would steer clear of them, but if you are interested in signing up to a rent-a-roof scheme, make sure you review every clause of the contract very carefully. One other option I personally would not recommend are subscription or buyback schemes. They're similar to rent-a-roof schemes but different, so similar in fact that they have to spell out why they're different on their website. To me, that's a warning flag already. Like a rent-a-roof scheme, you're entering into a long-term commitment with the company, making a monthly payment over 20 years, say. They claim to be different though in that you own the system supplied to you from day one, and you can keep all the income resulting from solar export. Subscription or buyback schemes are typically long-term financial loans, but with an added monthly fee for monitoring and support. Watch out though, because that monthly fee alone might seem small, but it could add up to thousands of pounds over the term of the contract. And added to the loan interest, it means you could end up paying 2/3 of the cost of the original install again. There are two additional problems as well. First, like rent-a-roof schemes, if you want to sell your home, you'll have to pay off the loan or persuade the buyer to take on the loan and the associated liabilities as part of the sale. I'm just not sure how many buyers would be willing to do that, making it harder for you to sell. And second, you have no control over which installer is commissioned to do the work. Just like with solar schemes run by local authorities, installers bid for the work, and more often than not, the cheapest bid wins. This invariably leads to poor quality work being carried out on your home. You might remember I asked people to share their installation experiences with me last year, and when I searched for subscription and buyback schemes, I have to say the experiences were not great. If it were me, I would always choose the installer first, and then look to see how that installation can be financed. It's why I launched my solar installer directory in the UK. Not everyone has the time nor the inclination to research installers thoroughly before making their decision. And so my directory lists installers serving your area that I would personally trust with my own money to do a great job. Just type getreadyfor.solar into your browser or scan the QR code here and I'll connect you with the best installers out there. Okay, back to the question we started with then. What options are open to you if you don't have all the cash available for an upfront purchase of home solar? We'll look at a few of these now, starting with mortgage providers. If you have a mortgage on your property, then it's worth contacting your mortgage provider to see if they can extend your mortgage to cover your solar and battery installation. After all, it's part of your house. For example, if your mortgage is with Santander Bank, you're allowed to borrow £5,000 or more for a minimum of 5 years at your current mortgage rate, providing the new mortgage total is less than 85% of your home's value. Because of the tight link between the mortgage on a property and installing solar and battery to that same property, I would expect most, if not all, mortgage providers to offer similar deals. Financial institutions. If you prefer not to extend your mortgage and instead opt for a standard bank loan, typical home improvement loans in the UK currently offer interest rates of around 5.8% to 6.4% APR for terms of 1 to 7 years, depending on the loan amount and your credit profile. But something that's become more and more popular in recent years are banks offering what are termed as green loans, where homeowners can buy renewable technology such as solar and battery at a cheaper interest rate. A great example of this is Nationwide, the UK's largest building society. If you already have a mortgage with them, Nationwide provides green improvement loans with 0% interest. You can borrow anywhere between £5,000 and £20,000 with repayment terms of 2 to 5 years. Another example, this time not a loan as such but a straightforward cashback, is Lloyds. If you have or are in the process of setting up a mortgage with Lloyds and you have a Club Lloyds account in place, just provide proof of a new solar and battery installation and you'll receive £1,000 cashback. Now you might ask, why are the banks offering such great deals? Well, they're doing it for a number of reasons really. Many governments around the world have set demanding renewable energy goals, and they're expecting the financial institutions operating in country to align with them in those goals. And these types of loans are low risk for the banks because they actually improve the borrower's financial stability through the energy savings that the customers receive. And because they're generally secured against the customer's property, that further reduces risk. So I'm expecting more and more banks and other financial institutions to be offering green incentives for renewable technology over time. And if your bank or building society isn't doing that, it's certainly worth shopping around. Please can you let me know in the comments any green related finance deals that you're seeing from the banks, as this will help others. Thanks. Now, it's not just mortgage providers and banks that are offering finance deals. Let's look at local authorities. Depending on where you live, your local council or authority might be offering a green loan scheme. For example, head over to Lendology if you live in the UK to see what your local authority is offering. If we look at Suffolk Council, they have a really great deal on at the moment. You can borrow up to £15,000 over 7 years at 0% interest. Hopefully other councils will follow suit. Energy providers. Your energy provider may also be offering finance deals for solar and battery installations. Here are a few of the providers in the UK that have finance deals on at the moment. Generally though, if you want to take advantage of these deals, you'll need to contract with the energy provider for your solar and battery install. As I mentioned earlier in the video, I would never let a finance deal dictate the installer I'd have to use. So if you are interested in a particular deal, make sure you do your due diligence on the installer as well. See my video here on how to go about that. The link is in the description. Solar installers. I'm seeing some solar installers also providing finance to customers, and one prominent installer in the UK doing this is Heatable. I wanted to find out more about what they offer, so I met recently with one of their directors, Ben Price, to ask him a few questions. Let's listen to what Ben had to say. So Ben, thanks very much for taking time out to have a chat with me. We're going to talk about some of the finance options that you offer your customers, but before we get into that, for people who don't know Heatable, could you just say a little bit about the company and also about yourself and why you're in the business?
Yeah, sure, no problem. So Heatable, online business, national business, started off with boilers, so boiler installations, transitioned into more renewable products. So we do solar panels, we do batteries, air source heat pumps, aircon. And the purpose or the objective of the business really was to make it easier for consumers, to provide an easy route to market, open book pricing, and to do the best possible job that we could do. Started off really as a bit of a project between me and my brother, so didn't really expect it to take off like it did, and quickly grew to a pretty big business. My background originally was in mechanical and electrical. So I did anything to do with energy services, anything to do with gas, electrical installs, management of labour. And my brother is a developer, tech background, designer. So he did all the fun stuff and I did all the difficult stuff.
Fantastic. So maybe I could ask you a question about the financial offerings that you provide to your customers then. Could you just say a little bit about what they are? Because I think you have more than one, is that right?
Yeah, we've got a number of different products that are available to consumers. So interest-free credit is a very popular product, so no interest for the consumer. And generally you'll find that over a 1, 2 or 3 year term, so shorter terms. Interest bearing, so that's your traditional sort of finance products. That's where you pay interest and you've got terms available up to 10 years. And then you have buy now, pay later, which is a new product really, quite a popular product with people who are maybe coming into some money down the road, would like 12 months of no payments and then they can clear the balance, or you then transfer onto a repayment product with interest.
Okay, well, it's great to see different types of finance being available then. Can you give me an example, maybe just with some numbers then, how that would work?
Yeah, so to keep the answer sort of simple in my head for the math, if you look at a typical sort of £10,000 deal, interest-free credit, we would require you to put a 25% deposit down. And that will leave you with a balance to finance of £7,500. So £2,500 deposit, £7,500 to finance. That works out about £208 per month over 36 months. So there's no interest, you pay your deposit, and at the end of the 36 months, that deal is finished. Now, interest bearing, if you wanted to take that over a 5-year period, if you put no deposit down, the payments aren't too dissimilar. They're about £210 a month.
Yeah.
The rate is 9.9%. However, if you put the same deposit down and did it over 5 years, the payments work out about £157 per month.
Right.
So interest-bearing credit is, you are paying interest obviously because you're using someone else's money and they're going to lend you that and you're going to repay them. But it is generally more flexible because the terms are longer. If you looked at like interest-free credit, £10,000 over 2 years, that's quite a high monthly payment. And that is a challenge for lenders, is around affordability. Right. So how much can you afford to pay back? What product is more suitable? because we have a range of products, we'll sit down with the customer and say, okay, how do you want this to look? Like, do you have a budget in mind per month? Do you want interest-free credit products? Do you want interest-bearing products? You know, do you want to go longer term, shorter term? And because you've got a suite, you can generally find one that fits.
Okay, I like it. So what prompted you to do this in the first place? Because not all installers, you know, provide finance and maybe expect customers to get finance elsewhere. So what prompted Heatable to actually provide finance as part of the package?
Yeah, so we had a lot of experience with the boiler market, and that was a product that generally crept upon you. You weren't expecting it,
yeah.
And not many people have got £2,500, and we became aware of that. We had a funding solution in place. When we came to the solar market and we started doing research on pricing, the first thing that we saw was, this is a lot of money. This is going to be a pretty small market. And we looked around at what finance offerings were out there, and they were either cumbersome, really expensive, or like just interest-bearing products at high rates. So we started speaking to some of our lenders and saying, what can we do? Because we had such a good record with them on boilers. They were like, yeah, we'll fund it. Because that's been an issue for the industry, is a lot of lenders, because of early mis-selling with solar, they didn't want to lend in the space. We had a good rep and we had a good relationship. So we came up with some initial products and we thought, this is going to work really well. We did some market testing. And really for us, it was a customer solution that wasn't there. We could enable it. And because we were online, we could have this sort of like online journey where people can say, how much is it on this month? What if I put that deposit down? What if I do this? And then you bring a whole new market into the, you know, system, if you like, because it's not just people who've got 15 grand, it's people who want the product that are looking for alternative ways to fund it.
I like it. And how well is, you know, the offering, how well is it going down with the customers then?
Really popular. So we see about 60% of all systems are funded. So someone will come in, some customers have got the money, but they'll still choose to fund it because they want to use that money on other things, or they would maybe want to put that money into like a high interest account, go on interest-free credit and make money over there, make money on the solar system. That's personal preference. Some customers still just prefer to pay out for it, right? They're just like, I don't want loans, I don't want anything, I just want to pay for it. But it lands really, really well. I think having a suite of products makes it a lot easier as well, because depending on your circumstance, we'll have something for you.
Right, okay. Well, here's a question for you then, Ben, and apologies for asking it, but if you are a cash buyer, why, if you're dealing with a company that offers finance, then obviously finance costs somewhere.
Yeah.
So is there a reason that they should go elsewhere perhaps and not go with a company like Heatable that's offering finance? You understand where I'm coming from?
Yeah, it's a good question, and it comes up. Money's not free. Someone's paying for it, and with interest-free credit, there's always a belief from consumers that you've just put the cost of the finance into the deal and you're charging it back to me, and I think I'm not paying anything. It can look like that, but when you backwards engineer how it actually works, it's different. So if you said that for us, for a lender, 60% of people take finance.
Yeah.
So it's only you have to spread that cost across 6% of people. It's not everyone.
Yeah.
And if you took an average deal of £1,000, let's say a subsidy of £1,000, 60% of people, so it's £600 across all deals. And what we will do is go to manufacturers and say, can you put some support in for this?
Right, okay.
We get commission on interest-bearing product that we'll use to offset the cost of interest-free credit. And we'll basically bring that cost down. So people think that they're paying £1,000 more than they are than a standard deal because they're paying for the interest-free credit.
Yeah.
When you look at the mechanics and how it actually works, deposits bring down the subsidy because it's 25% in. It doesn't actually make that much of a difference.
Yeah.
It's really being funded by other people. And it's a bit of a no-brainer, really. If you've got the money or you haven't got the money, whichever way it looks, and you can afford the interest-free credit repayment, use someone else's money. You're not paying a load more for it.
Yeah. No, I really like, and thanks for going into the detail of how it all works. That's quite new to me to learn about that. One final question, if I may, while I've got you here. You get a very good view of the UK solar market. What's your view in terms of where things are at now and where they're going, particularly in the relation to things like financing?
Yeah, so the market is definitely getting busier and busier for us. Month on month, every month is a new record. And I think what's starting to change in people's mindsets around funding is, it used to be, it was quite an exclusive club. You know, you had 10, 15,000 pound, you can afford to have solar. As awareness around funding's changing, more people are coming in, and we're seeing much more interest in longer term interest bearing credit. So someone will say, okay, my bill is £150 a month and my repayment's going to be £150 a month or £130 a month, whatever it is. And it's different. People have different mindsets on that. Some people are like, why would you do it? It's only £20. But that's like today's prices. Obviously, energy is getting more and more expensive.
Yes.
The cost of solar is coming down a little bit. Labour rates go up and enabling cost scaffolding goes up, but it is coming down. So there'll be a sweet spot where it's cheaper to fund than it is to pay the bill. So we see that as a long-term growth area for us in finance, and not just about promotional finance, which is like your interest-free credit, more what can I do about my energy bill? How can I access this? There's also like a bit of you love the product, I love the product. ROIs are great, saving money is great, but there's something about having like energy independence, having your own generation on site, being more aware about consumption, export, production, that there are other benefits to it. So if funding can get you into it, then it's a result.
Ben, thanks very much, and thanks also for your really deep insight into this market.
No problems, enjoyed it,
For my viewers. Cheers then, thank you.
Thank you.
Again, don't just choose an installer because they've got an attractive finance deal. Choose them because they're good at installing solar. And you can find installers that I highly rate in my solar directory, including Heatable. So, quite a few ways then for you to get your solar and battery installation financed if you need to. There are some additional methods depending on your situation that are worth considering too, starting with your pension. In the UK, if you're 55 or over, you're allowed to withdraw part of your pension tax-free. That's actually how I financed my own solar and battery installation 2 years ago, in fact. Of course, if you take money out of your pension, it means it's no longer there to grow your pension. But actually, if you look at your solar and battery installation as a financial investment, you're still able to grow that money. Here's how it could work. You take money out of your pension and buy a solar installation with it. That installation will immediately start saving you money on your electricity bills, which you can either spend and enjoy yourself, or you can invest all those savings into what is known as an individual savings account, or ISA, in the UK. This is an investment vehicle where any growth is tax-free. Other countries have similar accounts. In America, I think it's called an individual retirement account, or IRA. The interest on all your savings will compound over time to quite a healthy balance. I made this video recently which looked at solar investments compared to a straightforward financial investment, and I concluded that a solar investment wins every time. Now, I'm not a financial advisor, so you will need to do your own sums, but the pension route could be a good solution for you. Credit cards. In the UK anyway, and perhaps some other countries, you can sign up to credit cards that give you 0% interest for anything up to 12 to 24 months. That may be all the credit you need to get your solar and battery installation, as you can use the savings you make to offset the repayments on the credit card over time. And if you need a longer time frame, I've known some people transfer the debt to a different 0% interest-free credit card at the end of 24 months. Now, I don't know if the credit card approach is for me, but if you're diligent, I guess you could make that kind of strategy work. Finally, selling your car. This was something that one of my Patreon supporters did to finance their own solar installation. And what I like about it is that it hits 2 renewable goals in one go. Here's what they did. They sold their internal combustion engine car, which was already bought and paid for. They then took out a lease on an EV via a salary sacrifice scheme, which is available in the UK. Basically, you get all the income tax back from your lease payments. They then used the balance from the ICE car sale to fund the solar installation and used the monthly energy savings to fund the EV lease payments. Pretty cool, really. Alright then, I hope you found this video useful if you're looking at ways to finance your solar and battery installation. And I'm sure there are plenty of other ways. Let me know in the comments and that will help others. A big thank you to my Patreon supporters who helped me in the making of this video, letting me know the ways that they finance their own installations. And if you'd like to support my work, allowing me to keep on making videos like this for you, you can join my Patreon here. And there are other ways you can support me coming up in a moment. Thanks for watching, and I'll see you again soon.